All right, good morning, everybody. 8:30 a.m., September 29th. This market is a little nuts. Welcome, everybody, to the stream. Let's get into these daily charts of the SPY, and we'll talk about yesterday. We'll talk about everything that happened. Let's go into the daily chart of the SPY. All right, so let me get my trusty marker here. All right, let's sum this up. Hold on a second. I got some truck coming through here. Apologies for that. All right. So we're definitely in balance. Okay. We're in a range we can't seem to come out of. Okay. So we got SPY here, tops, bottoms. We're in balance. Okay. And let's see here. We almost hit a trend line, the secondary trend line, and we actually almost hit the 9 EMA, the daily 9 EMA right here. So that's what's going on as far as the SPY. We can't seem to go lower, we can't seem to go higher. We're in balance, right? It's also month end. Okay, keep that in mind. And we've fallen pretty far. So I want to give you guys, let's just look at the cues, and then we're going to go back to my perspective on what's going on. Okay. Oh, this is actually the cues. Hold on a sec. Let's go back to the SPY. I apologize for that. Same thing though. I mean, SPY yesterday broke these highs, tried to go into this gap, partially filled it, almost hit this trend line, and then sold off a little bit at the close. And I mean, same story, but like we're in this bracket area. Okay, so now that I described that correctly, let's go back to the cues just to see that, and then I'm going to go into what I'm seeing. Okay, so this is the cues. I'm sorry, before. So the cues pretty much almost came to the 9 EMA on the daily, this trend line here, and then we got a bracket. Okay, that's the cues. That's what we're in right now. Okay, now what I want to show now is to give some perspective on why are we kind of hanging around down here. Yes, it's the June lows, right? But in a bigger perspective, okay, in the SPY, here's monthlies. This is a monthly chart, right? Just to show you. Okay, so in here, this is 2020 of December. That was the low. This is also a high of November 1st. Well, November of 2020. So that high became support. And then, the market took off. But look what happened. This is in June. That was the low, right? Now, where are we again? Came right back down to this 362 level. So this is a big level, okay, in the monthlies. In the SPY, you can see, support, resistance, even a little bit, maybe call that resistance, right? So this is just a big level. It's not just June by itself, okay? Let's go to the weeklies and show you even another level, okay? So in the weeklies, this is the weekly 200 moving average. Look where we're at. Right here, okay? This is the weekly 200 moving average. So this is somewhat of the reason this level's so important, right? When we came down here in June, the 200 moving average wasn't there, but now it's moving higher, right? So that's causing some support. Okay, let's look at the cues. Let's look at the cues in a monthly. Okay, cues, look at this. So in, let's say 2020, August, September, October, November, this is all support. Well, in June we came down and hit that support. This is 269 in the Qs and the monthlies, right? Well, what do we know? We come right back down. We haven't made the June lows in the Qs, okay? But this is just a big level, okay? Let's go to the weeklies. Look at the weeklies in the Qs. What do we have? 200 moving average, it's right on it. Last week and this week, we're not piercing below it. We're literally touching it and bouncing off, touching it and bouncing off. It's a big level. Not saying we can't go lower, I'm just saying that this is going to cause some support, okay? Not only are we going by the June lows, this is 200 moving average in a weekly, as well as a big level in the past. Okay? Just wanted to point those out. Alright, now we can go into some levels here really quickly in the SPY. Now I already pointed this out. These are levels we could go to. 362 we already went to. 355 is probably the next level. Okay. And now in the SPY, we have some levels here that I want to talk about. We have resistance at 370. We have support at 364. Let me get my little marker so I can show you. Resistance at 370. Support at 364. Okay. Key level is 361 is support. Double bottom here is 358. This is for the SPY, okay? Let's go to the Qs. So in the Qs, we have resistance at 280.33. You can see that here. Looks like we just broke this support at 275. And then look at 272. And then we have a double bottom here at 269. Okay, those are the levels that I'm looking at for the Qs. Alright, so let's look at some key factors here of what's going on with the market. Okay, just to give everybody a perspective. Alright, here's the VIX. Everybody knows this is the fear gauge. This measures 30 days out of fear. Okay, that's what the VIX does. But just so everybody knows, okay, the VIX, if it's the VIX right now is at 32. So if you divide the VIX by 16, that's 2. That means that today we could have a 2% range. That's what the VIX is implying, that we'll move 2% higher or lower. Okay, that's the range. When the VIX is at 16, that's a 1%. So that's how volatile of market we're in, okay? So another thing, this is very important to look at. Everybody who's been watching my streams knows I always look at the 10-year yield, which is very important. So this is the interest rate. The TNX is the interest rate, the yield. Okay, it's inverse to what bonds are doing, but it's very important. Okay, so this has been on a meteoric rise. Obviously, our market's been going down. Okay, to give quickly some perspective, I'll put a little study here just to show everybody of this versus the SPY. Okay, so the white candlesticks are the SPY, so you can see it moves inversely. This goes down, SPY moves up, right? Now look at this. Look at this meteoric rise, and what has the SPY been doing? Down, right? So that's the inverse. That's why you have to pay attention to this. Okay? That's why it's very important to pay attention to. I'm just going to get rid of that now. Okay, so yesterday, very important, Bank of England decided to say they're going to do some quantitative easing. Okay, when you do that, you buy bonds. Okay, that's why this bond this day yesterday crashed. The yields went lower a lot, and these are not normal moves for bonds. This just tells you the bonds are illiquid. When it's illiquid, that means it's going to be more volatile. So that's a little bit worrisome for the market, right? So today, the TNX is back up 2.56%. It's at 3.8. Yesterday's low was 3.7. So that when this goes higher, that's negative for tech stocks especially, but negative for the stock market overall. Okay. So we're back up. Can this last? I don't know. But the higher we go is the worse off for stocks, okay? The more volatile, the worse off for stocks. And lastly, let's go to the dollar. The dollar made a high yesterday. Was this yesterday? I just want to make sure. 28th. Yes. Of 114. Okay. It then crashed down and made a low of 112 yesterday, which was good for crude commodities based in dollar. Okay. But high dollar is bad for stock market. Okay. That's not good for the stock market. So today, the dollar's back up a 0.5%. Whereas it's at 113 right now. Okay, so these are all things you got to keep watching. Okay, dollar is going to go higher. That is very bad. Okay, now that I got that perspective, we can get into the futures market. Give you my perspective on what's going on. Okay, give me 1 second. I'll pull up my market profile charts. Okay. Alrighty. Okay, so like I was saying yesterday, okay, we broke this key bracket and went into the gap. So we went up and couldn't fill the gap. Sold off the close. Okay. This could have thought everyone was going to have a huge bar market rally up here, and it didn't happen. Now we find ourselves at 36.82 down here. So the ES is down 1.33% right now. The Nasdaq is down 1.65%. Okay. So we're back in balance. So this is yesterday's range. This is the overnight session. We're in the middle of yesterday's session. Okay. We're 100% net short in the overnight. We opened here and we're here. So that means everyone overnight is short. Possibility for a fade off the open. Okay. Now, let's point out one other thing that happened. This now, you see you have a green box and a purple box over this in the ES. So in the real-time trading hours, okay, 37.0950 is now the most traded price of the month and the most traded price of the week. Okay, and you can see just if I extend my circle out how many times we've traded at that price. So this price is now, I will call this a bull bear line in the sand. If we can stay above it, we're probably going to go higher. If we hang out below it, we're probably going to go lower. Okay. That's how that works. Okay, we still have composite profile. That's a completed profile. Okay, and now we're still in this bracket. Still in this bracket. Okay, we couldn't go above it yesterday. So this is called balance rules. This can be considered a look above and fail. And what happens when you look above and fail? You normally go back to the other end of balance. That's how that works usually. And then either we break this or we find buyers and go back up. Have to see. Have to see. Okay, let's look at the Nasdaq. So the Nasdaq hasn't brought the most traded price of the month lower like the ES did. So that hasn't done that yet. I expect if we hang down here a little more, we will. Okay, so again, the Nasdaq broke some key levels yesterday and then came back down. Okay, so we already know that. Now, what do we have here, right? We have yesterday's session, high and low. Here's the overnight, high and low. We're inside yesterday's session. That doesn't tell us a lot. It's hard to read because we're inside the session of yesterday, the overnight, right? But same thing, 100% net short. Everybody is short. Here's the open, pretty much here. Everybody's short overnight. Possibility for a fade off the open. Possibility doesn't mean it has to happen, but it is a possibility. Everybody's net short, 100%, and they haven't been hurt yet. Okay, most traded price overnight is right here. We get above that off the open, they're getting squeezed. Okay, that's how that works. So we're pretty much not as a clean bracket in the Nasdaq, but we still are in a bracket here and here. Okay, and we're gonna break out. This just moves. Just means the move is gonna be bigger. We're coiling up like a spring right now. We're coiling and coiling, and when you coil more and more and more, that spring's gonna expand more. Okay, the longer you balance, the bigger the move. Okay, so that's what we're queuing up for. It's gonna be higher or lower, one of those. All right, let's get into those 60-minute future charts. Give me one sec, everybody. Let's look at the ES first. All right. All right, what are our levels to look at today? It's very clear. This is the hour chart. Okay. Now, we have a pattern setting up. Okay. I'm not saying it's going to happen definitely, but it definitely is a pattern setting up. We definitely have an inverse head and shoulders pattern setting up. Okay. This would be one shoulder. This would be the head. This is the other shoulder. This is the neckline. Okay. If we're able to fill this shoulder out and pop back up here, good chance we pop through this, fill the gap. Okay, doesn't mean it has to happen, but it is setting up this level. Okay, and that level's 37, 35, 25 in the ES. That's resistance right now. We need to pierce through that with some volume today, if that's going to happen. Okay, we have support 3680. So again, resistance key level 37, 35, 25. Support here 3680, 50. right here. Okay, and then that double bottom here in the hourly chart, 36.14.50. We break that, most likely going to go lower. That's what I'm seeing in the ES. Okay. You also can see, just to show this trend line I have drawn down here. Okay. So that's been honored a couple times. 2, 1, 2. We'll see. Okay. Now let's go to the Nasdaq. Now the Nasdaq, okay, so the Nasdaq has a couple levels, right? We also have that pattern setting up. Not as clean. Not as clean as the ES. Not as clean. So this would kind of be a shoulder, a head, and here's the neckline. The neckline's this level right here, 11,556. Okay. Look at that resistance here. Okay. So again, if we build out this shoulder, right, and we come back up, possibility there's not much resistance here. Okay, possibility we can move higher. Have to see. Okay, have to see. So that's a key level, 15556 resistance. Okay, this was a support level that just got broken. So this 113.86, this was just broken. This was being support. I'm sorry, this was supportive until just the last hour it got broken. Now it's catching a bid. Okay. Next supportive level is 112.85, and then the double bottom here at 111.45. Okay. So big level in my eyes today is 115.56. Can we break this? Okay. Now we made these big move yesterday, right? So if we come back down here, you know, this 112.85, it gets broken, we could see these lows here. So we'll see. Okay, we'll see. All right, let's move on, and I'm going to give some scenarios here. Okay, let's go on to that zoomed in profile chart. Okay, so price is at 36.86 right now. Okay, inside yesterday's session, we're still within the balance area, right? So very hard to read. It's not easy. So this is what has to happen. Now this is a huge line in the sand now, this 37.09 level. The most traded price of the week and the most short price of the month. So if we get above that and hold, most likely going higher. Okay, so let's give some scenarios, and I'm gonna go here. Let's see here. Let's pick a color. Okay, so this is what I could see happen off the open. Okay, I said we're 100% net short. Everyone's short. Majority of trade has happened below this level here. Okay, below it. So I could see this happening. I could see us opening, breaking that 36.80, coming down in this demand, catching some bids, and then I think we move higher. And I think we could get some resistance here, pop above here, and one or two things happens from here. Okay, either we go straight for this overnight high and we start to fill in the gap, or we find resistance, okay, here, and we come back. Okay, reasonings for this: we're 100% net short. Everybody's short overnight. They're weak hands. Overnight players are weak hands. Look at all this volume here. These are all shorts that have not paid yet. They haven't had the cover. They're in profit. Okay, so if the market sells off, then we come back, right? Even probably get more sellers involved off the open. These guys gonna get squeezed. That's just how it works. Okay, it doesn't mean we're going to the moon. That's just how it works. Okay, and then obviously, lastly, I'll just give two scenarios. Okay, and what was that level I said? 36. Yeah, so this, if we come down, if we move up, we could also move up, find resistance here, and I think, you know, we could revisit the lows, right? Notice that it stopped here. Okay, or, we can come up. We also can come up here, find resistance again, and we go back down to the bottom of balance here. Okay, so whenever you're in this major balance area, to give somebody very generalized information, either we continue to balance in this area, right, build up more energy, coil that spring more, or we break out. That's really the gist of it. Okay, let's look at the Nasdaq. Okay, Nasdaq, we have those key levels, right? So I told you this is the key resistance level. This was the key in the SPY and their ES. I'm sorry. So again, here's the session from yesterday. Here's the overnight. Okay, it doesn't give you a lot of read off the open, but we are 100% net short. Okay, majority of the trades happened here. They have not have to cover their position yet. So again, we could push down to the lows in this demand zone, catch a bid, and squeeze those shorts. Okay, up to this level. You could pop above it and go higher, or we fail and we go back to the other end of we get back to the lows, right? Because this means a breakout. This means maintaining the balance. Okay, because we're eventually going to break out. I don't know if it's today. I don't know, right? Okay, other scenario, we could push up off the open. We could push up right here, find resistance, go back to these lows, and also push up. Okay, that's more of a balance. And of course, we could also push up, squeeze those shorts, come down, find some resistance, support here, come down, revisit this double low. This is the very bearish scenario, and we maybe break it, we make a new low. Don't know if that happens, but again, not to beat a dead horse, we are in balance until we're not. So we could do this. So that means come out of balance, can't make it, you short. Come out of balance here to the lows, can't make it, you go long, right? If you get follow through and you start building value above here, maybe we break out, same thing. Maybe we go lower, right? I don't know what's going to happen, but the balance could stay. It's month end. Crazy things can happen. Okay, that's it for me today. Hopefully, you got something from what I'm showing you guys. And please give me a like, comment, subscribe, share with your friends. Um, you know, set that little bell on there to remind you when I go live. And I'm gonna see everybody tomorrow again. And I wish everybody good luck. I wish everybody stays green today. Make some money. Be patient. And I'll see you guys tomorrow.